Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we are going to be talking about, as always, one of our favorite subjects, blockchain. But more importantly, the next evolution of what we can do with blockchain. That's right, tokenization. We've talked countlessly here on VCTV recently about the recent NFT, non-fungible token boom, and how we're seeing almost $700 million in transactions over the beginning here in Q1 that have been reported. When last year in 2020, we only saw 250 million transacted for the entire year. But coming into 2021, tokenization is the top of everyone's mind. We're looking at things like decentralized finance and how that, along with tokenized assets, could disrupt and change the financial industry. But also, how could that change the real estate industry, gaming, markets as a whole, and so much more? That's what we brought some of the best and the brightest from around the world to share their thoughts and insights and on the ground perspective with all of you, just as to what they're seeing and maybe some of the use cases and experiences that they've gone through, both as investors and entrepreneurs around this world today that we live in of tokenization and where things are about to go as well. And a big thank you to all of you tuning in. If you have any questions, comments, feel free to drop them in the box. We'd love to hear from you. And also, I'll do my best to ask the questions in real time, but we have a lot of speakers today, so if we don't get to them, we'll be available afterwards, and you can reach out to us on respective social media sites, and we'll have the follow-up conversation with all of you as well. A big thank you to the LaToken team and to Maria for making today's episode of VCTV possible. Again, I'm your host today, Kyle Ellicott. Let's go ahead and introduce today's guests. First and foremost, David, welcome back to the show. A quick introduction and background for everybody.
Absolutely. Good afternoon, Kyle. This is David Towell. I am founder and president of ProChain Capital. ProChain Capital is a crypto asset-focused hedge fund. The unique aspects of our fund are, first of all, it's 3 years old, which is saying a lot in the crypto space in terms of maturity. But we focus on the entire ecosystem of crypto assets, from investing in tokens, well-known ones, lesser-known ones. We also invest in equities and debt of companies that are in the payment space and financial transactions, PayPal, Square, Visa, MasterCard, long and short on those names. And then we also have a minority portion of the capital in our fund dedicated towards venture and startups. I come from an asset management background, so I am not a technician per se, but I've certainly learned enough to be very dangerous in the space, and really happy to be here again. Thank you, Kyle.
Wonderful. Thank you as well. It's always a pleasure to have you here on VCTV. Patrick, welcome back as well. A little intro, a little background for everybody.
Hello, everybody. So I'm Patrick Poirier. I'm a general partner at Dragon's Vault. We're based in Singapore, but we are willing to invest pretty much anywhere in the world. So we are a VC firm that invests in small and medium-sized businesses, except we leverage crypto asset as part of their cash flow. With that model, we've been able to be on track to generate about 230% this year of return for our LPs. And we're willing to invest in companies that are like more lifestyle business, because we make more money on the cash flow management than on the equity part. So all the companies that are not being liked by typical VC because of they don't have a exit potential, it's the kind of thing that we actually like. So it's a pleasure to be here.
Those are the best companies. So great, congratulations to you and your fund as well. Shahala, welcome to the show for the first time here with me on VCTV. It's a pleasure to have you. Similar to everyone else, a little introduction and background.
Sure. Thank you, Kyle, and thanks for your team. You guys do an incredible job and bringing great people together with ideas and spreading the knowledge. So I appreciate that. And I'm a investor, traditional investor in energy, real estate, mining. For the last 25 years, I have my own family office. And in essence, when I was buying the Plaza Hotel in 2018, I came out with, basically I was inspired by the ICO market that was going on I felt that the alternative financial exchanges and digital shares or tokens would be very important, in order to get liquidity for the actual real estate market and also the mining industry. So I invested in that, and essentially further on invested in companies that are software platforms that could create a compliant ecosystem in the United States that will allow for that entire sector to emerge. So I'm an active investor on mostly the actual asset side. So I've got significant interests in real estate and in mining, and I'm working very closely with another friend here on the show to now bring to market some security tokens very soon. And
wonderful. Yeah. Wonderful. And I think it's one of two friends. So I'm going to pick the one I think it is first, and we'll come back to the second. Karam, welcome to the show as well. First time with me here on VCTV. A little intro, a little background as well for everybody.
Thank you so much for having me on the show. It's such an honor and a pleasure, and such interesting times for the entire blockchain industry. We have been involved, I've been involved since pretty much the start. And the funny part is the reason of my involvement was because my family comes from banking, so we own banking institution in East Africa in multiple countries. And then we are also background is real estate. So coming from a very solid, type of business background, but innovation was very non-existent, and it is very understandable because in the regular real estate or regular banking, they're not leading with innovation, right? And they're leading with more in terms of capital than innovation. And so M-Pesa at that time had launched in Kenya, which is how to send money from person to person. And when that launched, we were like, okay, reading Satoshi's white paper, and we're like, oh, this could be amazing for Africa and India and Asia, where people need to send micropayments. And so we communicated with different people at who were doing Bitcoin at that time, including Hal Finney, and trying to convince him to help us with the fork that we were trying to do at that time. Or we were just trying to tell him, forget about Bitcoin because it's decentralized. Why don't we create a sort of like centralized chain, like more like Ripple for Africa? So anyways, we went to our uncle, and our uncle, the chairman of the bank, said, no, I'm not doing anything, and you guys, this is criminal activity, and please shut down whatever you guys are doing. And I know you guys are in any case. So we really got inspired by person-to-person payments, and that was what inspired us about Bitcoin, was its electronic cash. After that, we were one of the sizable miners. We started to mine Bitcoins, and in 2014, we sort of lost our fight with government actors such as China, Iran, Russia, and Kazakhstan, where 95% of all Bitcoin mining currently happens out of, right? And then we realized that, you got governments against you. And then we got involved more in terms of Ethereum, and then rode the craze of Ethereum. And we are invested in over 4,000 different cryptocurrencies. And we had a sort of a pray and spray approach in terms of, because we thought we have to help build the entire industry. And fast forward that to last year, it was a very depressing time, I think, for everybody in the regular business. I mean, we went from a bustling business in Dubai as Airbnb hosts to zero income instantly, right? In last year on February, March, and we had to lay off hundreds of people in the hospitality sector. And there was no hope. And thanks to crypto, it sort of created a hope for us. And then we got involved with Ethereum 2.0 staking. And I'm so happy and pleased and blessed that we have friends and support of the Ethereum community. And we were able to achieve the proof of stake blockchain implementation or the Genesis launch for Ethereum on December 1st. And now last week, we took a company public on the Toronto Stock Exchange, which is the first first DeFi company or proof of stake on Ethereum 2.0 company on any regulated exchange. And we look forward to supporting the entire industry. And I look forward to being part of this talk. And you can find me on LinkedIn. Thank you.
Wonderful. What an introduction. All right, Daniel, you got to follow that. That was a great introduction.
I won't aspire to follow that. I'm a lawyer. I've spent my career doing cross-border financial transactions, basically. I represent a lot of family offices, private equity firms, corporates, and some banks. And most of my work has been conventional cross-border M&A, structured finance, refinancings, this kind of thing. A lot of it in sectors such as real estate, hospitality, infrastructure, consumer goods. And I've sort of stumbled into this crypto world with some clients who are starting to get more active in it, and started actually with an effort to tokenize a major hotel asset a couple years ago. I would put this. We have a group. I'm with a firm by the name of Fisher Broyles. We're a large multinational partnership. I move between London and Chicago, and we do have a specialist cryptocurrency group. We're working on a number of transactions, so tokenizations of assets. The regulatory status of crypto is very uncertain, as you are all well aware. And the U.S. regulators, IRS, SEC, they're still grappling with some very basic issues that other countries have taken more definitive action on. But the exchanges that have been set up in places like Switzerland, Gibraltar, we're still struggling in the U.S. to move that far along. But I think good progress is being made. But there's still so much uncertainty about how do you categorize crypto. I mean, if you're a company that owns assets and you issue tokens, and how do you put it on your books? How do you account for it as part of your capital stack? So a lot of issues like this, but it's a big, brave world, and there's some interesting things starting to happen. I think the tokenization of assets, to me at least, and I defer to you experts, and to me, I think the tokens, having real assets behind tokens and having tokens that you can then trade on a conventional exchange, that to me adds a very different dimension. And I know a lot of the founders in the industry sort of say, well, that doesn't really matter and so forth. But in terms of the people I talk to, they sort of say, well, here, this is the real opportunity to have crypto tokens actually compete with sovereign currencies, some of them at least.
Well, and you're right. I mean, we've got it's a process, right? So, I mean, today we've got the traditional markets where people buy, sell, and transact equities, for instance. Now we're moving into this world of tokenization where we can have utility and security tokens, things that can be easily traded. We have swapping. We have things like DEX, so decentralized exchanges. We have traditional exchanges, and then we have some new things coming up with the world of decentralized finance, and then we have the traditional markets as well. So now we went from a few singular places to many options as well that have just continued to open up and unfold what seems like day over day. I mean, today Tesla has announced the official opening of being able to purchase a Tesla with Bitcoin here in the US and soon to be globally. We've also talked about Volkswagen and Fiat doing tokenization of rewarding drivers and introducing marketplaces. We've got tokenized decentralized storage as well, with Filecoin and Chainlink coming together, bringing storage and data together as well. We've got new central bank digital currencies that have come out. I mean, this world is evolving minute by minute, and in some cases even faster as well. And Shahal, I want to come to you first and just get your view on where all this is going. Because, I mean, back in 2018, you tried to do this with the Plaza Hotel, which probably received some pushback. But nonetheless, fast forward 3 years later, it seems like tokenization is almost all that the industry is wanting to talk about, because maybe we're finally here into
Yeah.
what a world could look like. So tell us a little bit about your experience and where you see the world of tokenization
Yeah.
as well.
Well, the experience, of the plaza was I mean, it was a very interesting experience in two ways. One was that the money that we were going to bring into this ICO was really from some friends that had significant holdings offshore in Latin America, and one of my friends that owned or still owns, the chairman of a significant bank, and his holdings wanted to be a leader in fintech and make his bank one of the first fintech banks in the world. And so that's how we set up the deal, is that we wanted to show the world that we can actually democratize, create digital shares out of a real estate asset, and it would be all subscribed. So the hedge that we had was essentially that this banking group of my friends would actually subscribe 100% to the $600 million price of the Plaza Hotel, and then we would actually do an ICO. And we were working at that time with a platform which is now well known, but that those days I think their first client. I think I was the first one that signed the deal. Where it sort of went a little bit sideways very fast was unfortunately, the one of the members of the Shark Tank, Mr. Wonderful, he happened to be an advisor to that company, and we had done the white paper and everything, and he went on CNBC on Monday morning and announced that he was tokenizing the hotel. And then Wall Street went nuts, and obviously everybody found out that it was actually me that was doing it, and we had some really serious phone calls coming in from Washington, asking what the heck was going on, because obviously they considered that to be a form of security, and at that time the ICOs were rampant, and they were looking very closely at the ICOs. So we actually had to pull back from that, and I'm glad I did, because some of the people that did ICOs in those days, as you guys know, T0 and a few others, are still grappling with a lot of investigations coming in from the SEC. So I wanted this to be something that I'd rather wait and do it compliantly and do it on a platform where we have the blessings of the SEC. And I'm happy to say that I am part of a group, a shareholder in a company, a broker dealer now, that has achieved that. They have gotten a license from the SEC and FINRA to be able to tokenize on any blockchain. And so with everything that's going on in the market, I am a bit concerned about the fact that Bitcoin is getting so high, and it's getting so high based on a lot of news of things like Michael Saylor's doing and Elon Musk is doing. But what concerns me and is that the fact that the U.S. and the SEC, if they see this getting a little bit too large in terms of corporate public balance sheets, and they feel that the real holders of Bitcoin are still not fully compliant, and there's a risk there, because if they pull their Bitcoin holdings, it cause a drop in price, and there's no net to the Bitcoin. And if there's significant actors that are public companies on our stock markets, they could create a financial risk. So what I discussed, and one of the things I've discussed with my friend Khurram, is let's try to find an alternative method and an alternative way to start security tokens, but security tokens that also trade on an exchange where institutions can have access, and those start trading as digital shares, giving people that are holding a lot of Bitcoin and Ethereum a capability to transfer some of that into the security tokens. Let's also look at ways of creating a stable coin based on real assets. Bullion is one. We're working very closely with some friends that have significant bullion holdings, so that people can now start to transfer some of the holdings they have in Bitcoin into a more stable currency to give that kind of a balance. I love what's going on with Bitcoin. I love what Khurram and the other guys are doing with Ethereum, but I think we should really now move as quickly as possible to bring real assets onto the chain and give people some diversification, because the worst thing that can happen is a hit from the regulatory bodies. We know India's banned it, and they've banned it because of various reasons. But if, God forbid, for any reason, the U.S. comes out with a shock in the system, and I'm sitting here in Washington, right? So I'm actively speaking through some of these interests that I have to the regulators. And their main concern is really their eyes woke up when the market went over $1 trillion, which is a combination of the altcoins, and their problem is that a lot of these coins are being traded on alternative exchanges. A lot of people in the US now that are getting into the Bitcoin rush, and we could see a lot of the conversations going on applications like Clubhouse, where people are starting to pitch this as a way to have an alternative income, possibly savings, for retirement. And that's when the regulators start to look at this as a very concerned tool that they, number one, want to, be able to scrutinize, value and transparently have a method of controlling to a degree in terms of at least within the regulations of their monetary system. So the U.S. is a very important piece to this. If the U.S. doesn't get in and support this soon, it may cause a big fracture in the system, and that's what we're trying to prevent by coming out with an alternative exchange, an alternative platform, giving people that want to tokenize their assets a real platform to go out and have liquidity, but also give the government the capability to be able to look in on what's going on. And so there's a lot of things going on, like with Tezos, for example, including our friends that did the Aspen deal. They're coming out with a big portfolio offering on Tezos for their security coins. We're very supportive of that. One thing I love about my friend Khurram is that he's an equal opportunity supporter. And so he's out there to support the entire ecosystem, and that's what I'm trying to do. I'm trying to come in with, as an economist, with some real assets, and as an investor looking forward and trying to help create that balance.
Yeah, and you're bringing out some great points. I mean, in terms of institutions, even with Coinbase's S1 filing that was made public, we saw they had over 7,000 institutional clients. We've got the MicroStrategies, as you mentioned, with Michael Saylor. We've got Tesla, who we know about. We also have Meitu out of China, who put almost 90 million, I believe is the correct recent figures, around $90 million in both of Bitcoin and Ethereum. They were the first publicly to announce Ethereum on their balance sheet as well. So to your point, one of these major institutions or companies removes that, that's going to cause major swings in markets. And to your other point, we've now surpassed $1 trillion and continuing to stay above that $1 trillion mark. This is much more than just what it was originally back in 2009. This is something of real tangible value and something to be paying attention to for everybody as well. And Khurram, I want to come to you next. I mean, Shahal was mentioning you left and right and some of the things that you're working on, but from your viewpoint, I mean, what does the world of tokenization look like as it begins to unfold here in 2021? I mean, again, we're not even end of the first 90 days of this year, and it feels like we've had more activity in these, call it 80 days, than we had all of last year in the entire industry, from DeFi to tokenization to NFTs to infrastructure, you name it. What are you seeing?
It's more like what has happened in the last 80 days probably hasn't happened in the last 8 years. And it's so thankful to people like Elon Musk and Michael Saylor, which have really helped this ecosystem grow up. Until that time, we were all basically, like cowboys and like little kids. And I think this 80 days has really made us become teenagers, the entire ecosystem. And as you know, having teenagers are very, moody. So I think the industry is going to become very moody. And institutionals have already, I think, have a lot of power in the ecosystem because, public companies in the United States are using, holding Bitcoin in their balance sheet today. I really, think the industry moving forward is there's a tokenization of the entire world. I mean, a friend of mine was laughing with me because there was a fart that was tokenized for $85. And then the Christie's tokenized and sold first time a NFT for $69 million.
We also had socks. Don't forget socks, Unisocks, which were tokenized socks that went for a lot. I don't have the exact figure in front of me, but I think at one point they crossed six figures at one point.
Yes, and
I'll fact check that.
It's so interesting because another friend of ours, Superworld, they're working with another friend of ours called Kim. She sold the first digital house as an NFT on called the Mars House for like $500,000. So it's the whole world is going like crazy. Just yesterday, Snoop Dogg and Lionel Richie decided they're gonna get involved in the NFT world. NFT is going to be a very important tool, not only to be able to tokenize art and different assets, but also the entire world can be tokenized through NFTs. We're working on different ways that it can help in the healthcare ecosystem. We're working on a project where COVID vaccines are going to be on the blockchain, and the vaccine card is going to be on the blockchain. So a lot of things, use cases are going to become about than just buying Bitcoin and holding in your balance sheet. And so I think the future is not about holding of value, but the future is about doing something with that value. And COVID has made us realize that what is important, what is really not important, and the world has become more connected. At the same time, the world is very disconnected, today.
Well, as the world has become more connected on that transition, to fact check myself, the Unisocks are currently going for over $85,000. Just to give that to the audience
so
as well.
That number 85,000 is very interesting because another friend of ours, they bought a painting of Banksy, and they created an NFT, and I think they bought the painting for $85,000, and they created a burning Banksy NFT token, and then they burnt the Banksy, and then they sold the token for $350,000. So as it goes from, but it was a great understanding, because as it goes from a physical asset to a digital asset, you have a possibility of a precedence, which is 300%. So it's becoming very confusing and very like weird, because now a physical asset has less value than a digital asset, which is very difficult for people to understand, especially the older they get.
Well, and it feels like we're at this interesting inflection point, right? Or this beginning, I should say, where we're really starting to see the capabilities or understanding some use cases. But the more research and time I spend in this industry as well, the more I see that this is going to be the future, right? Tokenization will just be what we live and breathe and eat. It won't be anything other than just an asset as well. And David, I want to come to you, inshallah. I think you might have a point real quick, but go ahead and chime in, and then I'll come to David.
Yeah, no. I was just going to say that real quick. It's just peer-to-peer transactions globally of people selling value between themselves is where it's going to. It was in my mind, but sorry. Please go ahead, David. Yeah.
No, it was perfect. I mean, that's a perfect transition to David. I mean, David, tell us what your view is as tokenization has begun to unfold here in 2021.
Sure. So let me pull back for a minute and give you a sense of kind of how I think of things and how our fund is positioned. It's quite ironic, and I think probably backwards, that we had the digitization of services with the advent and development of the internet. Because you would think that before you go ahead and digitize something that's very nuanced, like a service, you'd go ahead and digitize something that's very static and very uniform, like an asset. But we've overcome, I think, the harder part earlier. And we're now at the point of digitization of assets. And maybe that's because there's such a strong lobby of people that will fight against digitization of assets. Things as uniform as shares of stock of a company, a bond, any sort of borrowing, title to a piece of property, cash, so on. And when it comes to what we're working at now in terms of the digitization of assets, in my opinion, as an asset manager, the easiest, the layup, the kind of best risk reward opportunity is the digitization of the most boring of assets, inclusive of cash, of title to any sort of piece of property, whether that be a contract or title to, a home, an automobile, an insurance policy, so on and so forth. And then, all types of financial assets as well. To me, I think that the revolution there is going to be very quick. It's going to be swift, and there's going to be a lot of money to be made from it. I think moving over to some of the other assets that we've been discussing, I'd say an incremental shift from the easiest and most boring assets are the less liquid assets. So real estate, for instance. So real estate is never been particularly, sliced and diced and liquid as people want to go ahead and make it as it is in tokens. And in my experience, the best corollary for it is what happened at the beginning of CMBS and RMBS, commercial mortgage-backed securities and residential mortgage-backed securities and CLOs and CDOs, where, slicing and dicing and making things very liquid didn't necessarily end very well because Wall Street just wants to go ahead and pile a bunch of leverage on these assets as well. So when it comes to less liquid assets, I'm a little bit more hesitant. Certainly, I see the trend going that way. The question is whether that is the least risky and best risk reward opportunity there is to invest in. And then the last piece, frankly, from my perspective, is the NFTs. Some NFTs out there make a lot of sense in the sense that it's the only way to go ahead and represent ownership of that asset. So if it's a digital piece of artwork that I'm going to display on my wall inside of a screen, well, great. There's really no way to go ahead and have that unless you have the NFT for that, or that's the most efficient way. But if now you start to get to very esoteric assets, which frankly, until now didn't have any value at all, right? They're valueless assets. And all of a sudden we're ascribing massive value to them because of the fact that they're represented by an NFT. To me, that's the most risky part of the spectrum. So, that's the way I view, the world. And, based, I guess, on, the way words are coming out of my mouth and the sentiment, I'm sure you can imagine kind of where we're focused, the majority of our capital, kind of a smaller portion, and then an even smaller portion. Certainly at this point in time, obviously evolution, will change the allocation of the portfolio.
Thank you.
Sorry to add to David, there's some points which is we have to understand, the whole concept of blockchain is very decentralized, and and the whole, like, the feeling is to have a sort of a decentralized capability of investing. And one of the reasons I love NFTs, and I'm a big proponent of NFTs, is the fact that two things. It's got verifiable scarcity, so exactly how much of that product is out there. Then it's purely buying and selling, real economics, so there's no manipulation, lesser manipulation. And the other thing is ability for a regular person who doesn't understand crypto to get into crypto through NFTs, because now someone who can buy a $10 NBA Top Shot, or a $50 NBA Top Shot, or NFT, that will and he has something to see, right? Compared to explaining to someone, hey, you're gonna give hundreds of dollars and you're just gonna get a number here. So it's I believe this NFT craze is amazing, and we should all help it. The reason is it will bring more people inside the ecosystem through art, and art is very important. And we have seen art, open up conversations and communication between rival forces and rival people. And it's a beautiful thing, and especially if we can make blockchain a beautiful thing, it will open up the world to come in and be part of the ecosystem.
Right. It brings the opening gates of mass adoption here, right? To your point, I mean, the on-ramp of someone wanting to purchase a moment from NBA Top Shot, for instance, or a piece of art, is less restrictive than it used to be, because you don't necessarily need to know something about crypto. And we're seeing more applications coming into the world with that process in place, so that you can just get on and enjoy without having to know anything about crypto, without having to know anything about blockchain, and feel a little bit more secure, so that very soon, one day, we're all having a portion of the Plaza Hotel in Shala's eyes as well, or other assets, as he and David have mentioned as well. So Patrick, thank you, Karam. That was a perfect comment there. Patrick, to you, I mean, what are your thoughts of tokenization as well from your standpoint as an investor?
So I'm interested in a real life project that have value for the NFT or tokenization of assets. But when I hear that stocks, like in the NFT form, is worth $85,000, it's a bubble. It's not. It's gonna go to zero. I mean, I don't see, like, the only thing that comes to my mind is money laundering. That's the only reason why someone would want to buy at that value something that honestly doesn't really have that much real life use. It doesn't make sense to me. So, like, just as every market go to that phase of like hype, like valuation and value of things go through the roof, and then there's a massive sell-off and recorrection. It's gonna go through the same phase for the NFT. I give it maybe 6 months to a year. Maybe it's gonna go even faster if the market grow just that fast.
Yeah.
Meanwhile, like every industry that emerge, there's always some project that end up surviving those challenging time, and then they become behemoth. So like it happened to Amazon, it happened to Facebook, it always happened throughout history. So we are looking for real use cases of NFT. So far, we have identified 3 that we really like. One of them, for example, is one that we designed ourselves because it's critical to our investment fund. In this case, it's not tokenization of equity, but tokenization of the collective cash flow of businesses. So this is a token that is a fully owned subsidies of our investment fund. The token is called Cryptium, and it's launching next week on Monday. And essentially, that's what it is. It is a proxy of the collective cash flow of the business we invest in. They will have a contractual obligation to buy more of the token if they grow. So that means that as the company grow, their cash flow requirement will grow, and then they will be forced to go buy more of the token. And investors, in order to get the part of the upside, they will have to put collateral. So a business will not have to suffer like massive volatility, because they will be staking their token, and then they will be obtaining a specific rate of return. It's almost like a reverse mortgage in a sense. And it's saying we split the market into 2, like the type of investors that are risk averse. They cannot afford to buy Bitcoin like Tesla did and like wait a few months and then realize that it's lost 50% of its value. So we've basically shifted the risk to other type of investors that will put collateral in exchange for getting the upside above a certain threshold. So whenever you stake, you lock yourself into a specific rate of return. So it's a lot safer that way. And there's more interesting part of that project, but that's basically one NFT. It's not the NFT in this case, but it's the tokenization of the collective cash flow. There's 2 other projects that use more NFT. One, for example, I'll describe quickly, but it's about distribution. So it's about logistics. You go from one country, you have merchandise, you put it in a container, you send it by ship, it goes to like the port, and then someone else come and pick the merchandise, they split the container apart, and then they move all the merchandise all around the place in the country. Every time the merchandise ends and gets split, to me, that should be an NFT. And it's an NFT that you can split, and then that main NFT that represents the physical asset, which is the merchandise of the container, you split it, then it becomes 2 NFT for the specific piece of the container that you send elsewhere. So whenever you grab ownership and custody of the physical goods, you have to buy the NFT from the other person. This way, if the physical good gets stolen or disappear or get damaged, the NFT would lose value. So to me, that's a good use case for logistic. Another good one is like deeds for land. You want to be associated that you have a certificate of ownership of the deed. And then whenever you want to sell it, you sell the NFT with it. You had the contract and all the list of previous owner could be stored on the NFT itself. Things like that have real use case. But you have to dig deep, because if you're just trying to use blockchain technology to reproduce something that can be done more efficiently with a centralized database, it's not that necessary. So it has to provide some advantage. And at the end of the day, just like Bitcoin, it's about trust. You don't have to trust whoever you're dealing with, because there's a severe penalty of trying to game the system and take advantage of it and try to falsify data. So,
well, and you may not always need it as well. So blockchain and or tokenization may not always be necessary for you and your business. It's something to be explored. Shala, looks like you unmuted. Do you have a comment to add?
Yeah, I mean, what Patrick was talking about is amazing also for governments, because governments have been using a very old stamp duty tax system. I remember that there was a couple of tenders that I was aware of, that I helped form some consortiums in Pakistan as well as in Africa, where the government would track and trace, sale of goods and taxes from things like cigarettes, Coke, what have you, goods, because it's so very difficult in certain markets to get taxes from black market goods. So I mean, once again, so many use cases that are good for NFTs. Just on some of the comments in the beginning, I think the guys that bought the socks and did these kind of things are marketing geniuses, because it's so ridiculous. And I think they could do it because I think the people that did this are the guys that bought Ethereum at like 1 penny or Bitcoin, so they can afford to create a marketplace. But so I don't think and I hope there's no money laundering going on, obviously. But I think the impact and the noise created by these sort of transactions are helping people get curious and then helping people learn what's going on. But like I was talking about in terms of what Bitcoin's going on, and hopefully a balance into tokenized assets with value that will backstop those, the same things were going to happen with the NFTs, because the NFT is non-fungible. So non-fungible means that you actually do a trade, right? And then it goes away. And so there's going to have to be legitimate markets that are created, so the use case lives and it goes on and actually has a benefit to society. And we get away from the joking and tokenizing stupid things and actually get into proper commerce and economy. Yeah.
Agreed. And I apologize, we are at time. So I want to come around for everyone for closing thoughts and where you can be found. This is a great discussion and one we need to continue, because everyone here as experts, we could all talk about this for hours upon hours, but I want to be respectful of each of your schedules and time as well. So let's come around for closing thoughts and then where you can be found online. Daniel, 1 or 2 minute quick closing thought, and then where can you be found online for those in the audience that may want to connect with you and to speak further?
Sure. I'll be quick. I think the points that really stuck out with me are, I forget who made the comment about helping in third world situations, microfinance. It was Karam, and I've worked on microfinance. But so much of the conversation has been about the good thing about crypto is it's helping monetize things that otherwise would not be monetized. It's giving liquidity, and it's helping all kinds of people access liquidity to do things, buying and selling. So that is the great promise of crypto. I mean, maybe some of you remember things like debt swaps, or who was I think like Paul just talked about, trading trade bills and so forth like that. So the monetization aspect, the liquidity aspect, and spreading the wealth to all kinds of people is the thing that really is the great opportunity here, I think. And I'm online at daniel.larkin@fisherbroyles.com.
Thank you, Daniel. Patrick, any closing thought? And then where can you be found along with Dragon's Vault as well online?
The thing, I'm a proponent of NFT and tokenization, as I said earlier, but I would advise caution into buying in things that are just trending. Because let's say you don't want to end up buying GameStop when it's at $400 when the value is obviously much less. So I would advise caution and to look up what kind of project really makes sense to make things more efficient in the long run and help the industry overall. And where you can find me is that you can look us up on our website, dragonsvault.co, or you can look me up on LinkedIn as well by searching my name, essentially.
Thank you, Patrick. David, closing thought, where can you be found?
Sure, Kyle. I just want to thank the panel. I learned a lot from this panel, and I appreciate being part of it. In terms of finding me, I can be found at david@prochaincap.com. That's david@prochaincap.com, and I can be found on LinkedIn as well.
Thank you, David. Karam, to you next, closing thought. I apologize, we didn't get a chance to get into the proof of stake versus proof of work conversation. We'll save that for another episode. But any closing thoughts you have, and where can everyone find you online?
Yes, look forward to it. No, thank you again, the panel. I'm really honored talking to everyone. And it's so interesting because thank you so much for putting this together, because this opens up conversations and new friendships. So I look forward to our new friendships. You can find me on LinkedIn. That's probably the best way to find me on. Or you can now, I just became a co-founder of Ethereum Genesis as of yesterday. So you can also find me on Ethereum Genesis. Thank you, my dear.
Congratulations as well. And Shala, close us out. Your closing thought, and where can everyone find you online to continue the conversation as well?
Oh, they can find me on LinkedIn, and I don't have much to say, and I just thank you for doing a great job here, and I look forward to continuing our discussions on these topics and looking to see what we talked about today, how they progress and how they manifest. I think it's exciting times.
Wonderful. Couldn't agree more. And thank you all again for sharing your thoughts and insights and your time today as we did go over. So I appreciate staying a little later as well. And we're looking forward to welcoming you all back to continue today's discussion around tokenization, but in the entire world of where we move towards a decentralized future as well. And to our audience, thank you so much for tuning in. Thank you for all the great comments, all the great questions as well. Hello to everyone around the world. We do appreciate you tuning in. If you'd like to be on a show like today, to share your thoughts and insights, do reach out to the team and or myself. We'll find that right spot for you. Big thank you to the La Token team and to Maria for making today's episode of VCTV possible. And with that, you can find me along with all of our guests, as they mentioned, on social media, most likely on LinkedIn, and we'd be happy to continue the conversation. Make sure you add context when you reach out, where you heard us, where you met us, and what you would like to continue the conversation about. With that, I'm your host, Kyle Ellicott. We'll see you back here tomorrow with more VCTV. Everyone have a great day. Bye.
Thank you.
Thanks, everybody.